I love being in the futures markets for crypto because you could go short really easily, right? I don't have to borrow money from anybody. I don't have to do any stuff. Just hit the button and you're
Yeah.
short.
When you see something move 10, 15, 20% a day, the initial reaction is the Macaulay Culkin and grab your face and scream. With Bitcoin, that's just called another day.
Let's talk about crypto a little bit. When you think about it, and I'm thinking through the lens of futures trading, most futures products have a conspicuous cash basis. So, as an example, corn is a physical, right? Copper is a physical, gold's a physical, and even like the Euro FX versus the US dollar, I can get euros and put them in my pocket. Can't put crypto in my pocket. It's one of the few ones you just can't get your hands on when we're talking about futures trading. For me, the question to you really is how does this market hold up?
Well, ultimately, I think it comes down to what's your objective here, right? So if I'm looking as a speculator trying to, work the price fluctuations of Bitcoin, which are off the charts, I mean, you have incredible volatility, then, the futures market is fantastic. But if you want physical delivery and to impact the crypto space, you need to look outside the futures market, right? Because it's cash settled. You have no futures delivery. So I was kind of hoping that when they built the product that it actually would be physical delivery. To me, the product works as is, but doesn't do the greater good of cryptocurrency development and kind of growth of the industry.
Yeah, no, I hear you, man. I love being in the futures markets for crypto because you could go short really easily, right? I don't have to borrow money from anybody. I don't have to do any stuff. Just hit the button and you're
Yeah.
short.
Especially when you have, moves like we've had over the past few days. I mean, when you see something move 10, 15, 20% a day, the initial reaction is the Macaulay Culkin and grab your face and scream. With Bitcoin, that's just called another day. Anybody out there that's trading those products, you better have a different set of blood type because that's a pretty wild market.
And hedging could be important here, right? If your technical analysis says, hey, we're going to be in a bear mode for a while, so I'm going to hedge the investment that's in my pocket and I'm going to sell some futures contracts.
100%. Or should I choose to, I could be selling the Bitcoin futures products and offering that as a hedge for my portfolio.
So the CME has created these products. The big one, which is probably out of reach for most of us because it's the margin there is huge.
Like 70 grand.
Yeah, that's too rich for my blood, as one would say. And then the micro, though, the micro Bitcoin is not. That's a smaller size contract. You could scale in, scale out, and do all the things that traders and investors do.
Yeah, and I think that's a great product. By creating the micro, you've really helped people out significantly to open that door and allow them at least to experience that volatility, to play with it, and not get hurt too bad. Because if you're on the wrong side of a move like we had, you could lose everything, especially on a leveraged instrument.
I just read a couple of days ago, I think this was a Wall Street Journal article, and it was suggesting that the crypto miners now are in competition for energy with the AI folks. So we have the AI folks competing, and the AI folks seem to be winning. As a matter of fact, it suggested that 9% of all the energy that we're going to need in 2030 is going to go to AI.
Let's hope that the Blackwell chip by NVIDIA is much more energy efficient, right? And we can get a little bit more out of that bang for our buck out of that bad boy. But yeah, you are seeing mass energy consumption from both of those entities. Ultimately, I have to look at it as a trader. And yes, this is a fact that these are consuming more energy. And how do you play that? Well, you start buying Edison and other utility companies and start making those plays. I don't know what it's like out where you live, but my energy prices have soared here. My electricity has gone from 16 cents a kilowatt hour to 34 cents a kilowatt hour in just a couple of years. So the play will be made off the energy companies, and nothing I can do about it. We just have to adapt to what the market gives us. And unfortunately, I pay a lot more electricity.
Yeah, no. So I'm in South Carolina here, and we all have pitchforks and torches. So our energy costs aren't so far out of whack.
So there is a historical norm that happens. And if you step back and look at the big picture from inception in 2009 of Bitcoin, there's this 4-year cycle. And I'm not trying to be a conspiracy theorist or anything like that. I'm a trader. So my whole life is about identifying patterns and capitalizing on those patterns. With Bitcoin, this 4-year cycle is real interesting. We're in the middle phase of it, which is this slow kind of downward move for 3 to 6 months after the Bitcoin halving, which happened in April. And here we are 5 months in, and it's doing this exactly what it has done 3 times before. What's interesting is after about another month or two, so I'm looking at early October-ish, is when all of a sudden this incredibly powerful bull market comes. And I don't know why, I can't explain it. But I look at those charts, and every single time it has done it, you're talking my price target for November of next year is going to be $250,000, which a lot of people are going to freak out about. But just mathematically, it lines up like your Fibonacci's do with the historical price movements of Bitcoin. We could talk about regulation and some of the new things with the new potential presidential changes coming, but the reality is patterns are there for a reason. They're a reflection of mass psychology and behavioral analysis. And if they're telling me that the huge bull market's coming, I'm loading the boat.
Okay, so you're looking at seasonal patterns, basically, even though it's not seasonal, but you're starting that with the halving events, right?
And you know what the halving is, right? The halving is where the miners are rewarded, which is another great play for people out there. When you look at what happened to Riot Blockchain and Marathon and Hut 8, these mining companies all of a sudden had their earnings literally chopped in half overnight. That's going to impact their business. And again, there's trades that can be made there on those assets as well.
Yeah. Does it get to the point where it's just not worth mining anymore?
Great question. So, right now the mining reward for a Bitcoin miner is 3.125 Bitcoin. There certainly is a great monetary reward. The question is, does the cost structure of those businesses, will they be making money off of those 3.125 Bitcoin? When we go to the next one, it's going to go to 1.56 something. And a lot of people go, well, at a certain point in time, they're not making any money from the rewards of the Bitcoin blockchain. But in theory, the way the trajectory has been going, we will see the price of Bitcoin not at 60,000 at that point. It'll be like 4 or 500,000, or as Kathy Woods thinks, 3.5 million is one of her forecasts for Bitcoin. The valuation of Bitcoin increasing with adoption over time, I think, is one of the cornerstones of the architectural structure of Bitcoin.
Yeah, and haven't we mined a huge percentage of the total that's available?
So we're only got a couple million left, 1.3 million left till we're exhausted all the Bitcoin that are made. And then the question that you're probably thinking is, well, then what incentive do the miners have to continue to maintain Bitcoin's network when there's no reward for them, right? Well, the reward is they get rewarded for the block, but they also receive the fees that are transacted during that block. And if the price of Bitcoin is so expensive in the future, then those fees will be more than enough for them to maintain their business practices.
Okay, so who's them? Who pays the fees?
So if I make a transaction, so let's say I want to send you $500 worth of Bitcoin, I get to do that, right? No one can impede that process. It's just peer-to-peer payment. When I make that, I have to pay a little bit. So in one of my classes the other day I was teaching, I sent some Bitcoin as an example to students. I had to pay 40 cents. No big deal. That 40 cents goes to the miner that actually solves that block.
How does this fee transmitted? Is it electronic part of the process, or is there a clearinghouse in the middle?
No clearinghouse. I mean, that's the beauty of this whole thing is imagine a world where if I want to trade a futures product, I no longer have to deal with the CME. If I want to buy a stock, I don't have to deal with the NASDAQ. If I want to buy a can of Coca-Cola, I don't have to deal with Kroger's or Vaughn's or Stater Brothers grocery stores. We've removed intermediaries. When you have an intermediary, you have an increased cost, right? That middleman is taking a cut, whether you're getting a car, a loan, a home. So with peer-to-peer payment networks, you're removing those intermediaries. So costs diminish significantly, and that cost savings gets passed on to you and I. It's a decentralized network around the world of tens of thousands of people that maintain that.
But end game, right? This is an inelastic market, right? There's a limited amount that's ever going to be made. We're already at a high percentage of it. In an environment where there's a limited supply, it's kind of like a one-sided price chart.
Which is one of the reasons I'm a big fan of Bitcoin. When you have scarcity, right, things go up in value. I mean, what gives gold its price valuation? Obviously, people's view of gold, but also its scarcity. With Bitcoin, the scarcity is one of the major drivers of price. And I think one of the misconceptions is that you have to buy a whole Bitcoin. It's 0.000000001. That's the smallest increment you can buy of Bitcoin. It's called a Satoshi. And if this gets bigger, I think for you and I, Jim, it probably doesn't make too much sense because we have a robust financial system. You and I are in the United States. We have dollars, we have lenders, we have banks, we have all the financial services we could possibly think of. But for a majority of the world, they don't have access to things like that. And Bitcoin actually can represent that because you can build ecosystems in that digital world, which will allow people to get access to insurance, to all the different financial products that we have here in the US or in Europe. So we get adoption, and as more and more people start to use it, you have more demand, you have a fixed number of supply. There's only one place for price to go, and that's higher.
I don't have a wallet. You need a wallet or something like that, right?
I have this thing called a Nano Ledger, which is this little guy right here. It's literally a device that just keeps my wallet addresses and my keys to access those. It's funny because people say, oh, well, your Bitcoin's on this device. It's like, no, it's not on this device. What's on this device is simply the address on the blockchain where my assets reside and the keys to open that address. I could take this device, throw it in a blender, little vodka and some peaches, and I could make myself a peach daiquiri with my ledger here, grind it up into the smallest little pulp and just take that and drink it. And you're like, oh my gosh, you just lost all your crypto. It's like, no, there's a thing called a seed phrase, which is 24 words. That seed phrase, I can recover anything, anywhere, anytime.
This presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader, LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.